Today's discussion centers around a statement that has been circulating, suggesting that restrictions on dollars entering Iraq, efforts to combat illicit financial flows, and political leadership changes could influence the Iraqi dinar's exchange rate and potentially break it free from what some describe as economic pressure or stagnation. Let's take a careful, professional look at what this actually means, separating emotional language from economic reality and focusing on what truly matters for observers of Iraq's currency and economy. First, it's important to understand the broad context behind references to dollars entering Iraq. Iraq operates in a heavily dollarized environment where the US dollar plays a significant role in trade, government finance, and monetary stability. The Central Bank of Iraq manages a foreign exchange auction system which has historically been used to provide dollars to the local market for imports and other needs. However, this system has also faced criticism over the years due to concerns about misuse, including capital flight, smuggling, and illicit transfers. When commentary mentions blocking dollars or limiting their entry, it typically refers to tighter controls on dollar transactions. In recent years, regulatory pressure, particularly from international financial oversight, has pushed Iraq to strengthen compliance mechanisms. These include stricter documentation requirements for imports, improved monitoring of banking transactions, and efforts to prevent money laundering and unauthorized transfers abroad. From a financial standpoint, tightening access to dollars can have both positive and negative effects. On the positive side, it can reduce corruption, limit illegal outflows, and strengthen the integrity of Iraq's financial system. This is especially important for maintaining international confidence and ensuring continued access to global banking networks. A more transparent and compliant financial system can, over time, support economic stability and institutional credibility. However, there are also short-term challenges. Restricting dollar access too quickly or too aggressively can create liquidity shortages in the domestic market. Businesses that rely on imported goods may struggle to obtain the foreign currency they need, which can lead to higher prices, supply disruptions, and pressure on the local currency. This dynamic has been observed in Iraq before, where sudden tightening measures led to fluctuations in the parallel market exchange rate. Now, let's address the claim that such actions could cause the dinar's exchange rate to break free from captivity. This is a powerful phrase, but from a professional economic perspective, exchange rates are not simply released or unlocked by a single decision or political change. The value of a currency like the Iraqi dinar is influenced by a combination of factors, including foreign reserves, oil revenues, inflation, monetary policy, fiscal discipline, and overall economic productivity. Iraq's economy is heavily dependent on oil exports, which generate the majority of government revenue and foreign currency inflows. As long as this structure remains in place, the dinar's stability is closely tied to global oil prices and production levels. When oil revenues are strong, the central bank has more capacity to support the currency. When they decline, pressure can build. Additionally, Iraq currently operates under a managed exchange rate system, not a fully free-floating one. This means the central bank actively intervenes to maintain a relatively stable rate against the US dollar. Any significant shift in the exchange rate would require careful planning, coordination, and economic justification, not just political will or rhetoric. The mention of breaking the hand of thieves suggests a focus on anti-corruption efforts, particularly in relation to financial flows involving neighboring countries. While such statements are often politically charged, there is a real economic issue at the core. Illicit financial activity can weaken a country's currency and drain its resources. Addressing corruption and improving governance are essential steps toward long-term economic health. If a new government or leadership takes a stronger stance on financial discipline, transparency, and anti-corruption measures, this could have positive implications for Iraq's economy. Over time, these reforms can enhance investor confidence, improve fiscal management, and create a more stable environment for economic growth. However, these benefits tend to materialize gradually rather than immediately. It's also important to consider the role of public expectations. Statements that suggest rapid or dramatic changes to the exchange rate can create unrealistic expectations among the population and investors. In reality, central banks typically prioritize stability over sudden shifts. A stable currency helps control inflation, supports trade, and maintains confidence in the financial system. In the short term, tighter control over dollar flows may lead to some volatility in the parallel market exchange rate. Businesses and consumers may experience temporary adjustments as the market adapts to new regulations. This could include higher prices for imported goods or delays in supply chains. Policymakers will need to carefully balance enforcement with economic flexibility to avoid unintended disruptions. In the medium term, if reforms are implemented effectively, Iraq could see improvements in its financial infrastructure. Stronger banking systems, better compliance with international standards, and reduced corruption can all contribute to a more resilient economy. These changes can also help Iraq integrate more fully into the global financial system, which is crucial for long-term development. Looking at the long-term perspective, the key question is whether Iraq can diversify its economy beyond oil. Sustainable currency strength is typically supported by a broad economic base, including manufacturing, agriculture, services, and technology. If Iraq can invest in these sectors, create jobs, and increase productivity, the dinar could benefit from stronger underlying fundamentals. However, it's important to emphasize that currency revaluation or significant appreciation is not a simple or guaranteed outcome. It depends on consistent economic progress, sound policy decisions, and external factors such as global market conditions. Sudden or artificial changes to the exchange rate without strong fundamentals can lead to instability and unintended consequences. Another factor to consider is inflation. Maintaining price stability is a core responsibility of the central bank. If the dinar were to strengthen significantly, without corresponding economic support, it could impact exports and government revenues. Conversely, if it weakens too much, it can lead to higher import costs and reduced purchasing power for muwatanin. The idea that a new prime minister could immediately transform the exchange rate also deserves careful examination. While leadership matters and policy direction is important, economic systems are complex and require coordinated efforts across multiple institutions. Structural reforms, legislative changes, and institutional capacity building all take time. Political stability is another critical element. Investors and markets tend to respond positively to stable and predictable governance. If a new administration can provide clear policies, reduce uncertainty, and maintain constructive international relationships, this can support economic confidence. However, political transitions can also introduce short-term uncertainty, which markets may react to cautiously. It's also worth noting that international partnerships and oversight play a role in Iraq's financial system. Compliance with global standards, cooperation with international financial institutions, and adherence to anti-money laundering regulations are all essential for maintaining access to global markets. Any changes to dollar flows or banking practices must align with these requirements. From the perspective of Iraqi Dinar followers, the key takeaway is to focus on fundamentals rather than headlines. While statements about breaking free or dramatic changes can capture attention, the reality is that currency movements are driven by measurable economic factors. Monitoring indicators such as foreign reserves, inflation rates, fiscal policy, and oil revenues provides a more reliable picture of the dinar's outlook. In the current environment, the central bank's priority appears to be strengthening financial controls and ensuring compliance with international standards. This is a positive step for long-term stability, even if it creates short-term challenges. A more transparent and regulated system can reduce risks and build confidence among both domestic and international stakeholders. At the same time, policymakers must remain mindful of the impact on muwattinin and businesses. Ensuring access to essential goods, maintaining price stability, and supporting economic activity are critical for social and economic stability. Effective communication and gradual implementation of reforms can help ease the transition. In conclusion, while the language used in the statement suggests dramatic change, the underlying reality is more nuanced. Efforts to control dollar flows, combat corruption, and improve financial governance are important steps towards strengthening Iraq's economy. However, these actions do not automatically lead to immediate or significant changes in the exchange rate. The path forward for the Iraqi dinar depends on a combination of factors, including economic reforms, political stability, oil market conditions, and effective monetary policy. Progress in these areas can support gradual improvement, but expectations should remain grounded in economic fundamentals rather than speculation. As always, staying informed with accurate, balanced analysis is the best approach. Understanding the broader context helps avoid misinterpretation and supports more responsible decision-making. Make sure to subscribe to the channel for responsible and factual Iraqi dinar updates. And remember that this content is for informational purposes only and not financial advice.